Yeah, good morning, Aisha. Welcome to the biggest event of Jai Shri Ram, and now looking forward to 26th January. Also, not to forgot to mention the Dow crossing 38,000. The pessimists and the people on the sideline waiting for corrections and talking of overvaluation, all that is on the sideline. The mid-cap index hit an all-time high. REC, PFC, NBCC, GAIL, you name the stock, IREDA. Look at the earnings and look at the numbers. So they are expensive, but it's expensive because there is no ownership. I was very flattered by the numbers of Colgate. I think Colgate, and I've been repeatedly telling you from 1800, Colgate is going to be the star for the FMCG. Now you watch Nestle's numbers. So I still think that now there are enough wheels to add to new highs. And I would be more bullish on the bank nifty, given that the PSU pack on earnings along with ICICI have been stellar. So I think the underperformance of HDFC now gets neutralized. By the way, almost 25,000 crore worth of HDFC stock has been sold. Now, whether it's a discount of 10% or no, who knows that you could see an expiry closer to 1600 on HDFC itself, given that most of the carnage is in. So extremely positive for the next 3 days and beyond. But let's watch for 21,850 being crossed and all the bears coming for covering.
Absolutely. Zee Entertainment, after all the flip-flop, it looks like there's been a crash landing. The merger has been completely called off, and all the brokerages are warning that there's going to be nothing short of a free fall now for Zee Entertainment valuations. And question is, what's going to happen now?
Yeah, unfortunately, this was coming and you had to be geared up. But let me tell you, 61% of Zee is owned by mutual funds and LIC. So how can you have the largest shareholders do nothing? And now there are question marks on those independent shareholders, board of directors who did nothing for 3 years. So I think the Goenkas will be shunted out, and that would be the best case of consumer investor activism which you are seeing. I am very, very optimistic that there will be as a disclosure, you are aware, Mukesh Ambani had put in a bid only to be second to Sony. And I think now there will be another buyer. The underlying business remains very robust. Yes, the uncanny thing of Sony calling it off, we'll see a lot of court battles, but we'll wait for that to be played out.
Your dog who's disturbing us right now, Sanjiv?
Huh?
I said, is that a dog nearby you?
Yeah, that's my third son called Shiro. So he's playing little spoil sport. Sorry for that.
No worries at all. Maybe we'll get more TRPs if we have him on air. But that aside, I wanted to get your thoughts on the railway stocks, because we were just discussing this a short while ago and looking at the mammoth move as well that we've witnessed in some of these rail stocks. Is it advisable to jump on, or have you missed the train completely?
Awan, that's what I'm saying. The stock market is a glass half full, half empty. Don't look at the HDFC Bank of the world. Look at the broader market. NBCC, the rail stocks, REC, PFC, the list of PSUs hitting new highs is endless. Union Bank numbers, IREDA numbers. That is where the money is being made. And unfortunately, that class was missing for mutual funds. And some of the, large PMS who said PSUs are untouchable, and so are technology stock. Look at the earnings from Persistent. Look at the earnings from Coforge. Not to forget SW Solar. It's been hitting 3 circuits, and for the right reason. As you just pointed out, 1 crore solar panels to be installed. SW Solar is the lowest cost producer, MEP player, mechanical engineering and plumbing, and it will be laughing its way. So I still think there is a huge under ownership of PSUs that will be gather steam. As a disclosure, we have IRCON and IRFC both in our portfolios, but please do not chase them. But replace some of your real estate stocks with large cap banks. I think ICICI Bank is going to see a 30% jump in market cap over the next 3 to 6 months.
Well, you said real estate. Curious to know, Sanjiv, any fresh ideas within the realty pack or any beneficiaries?
No, like I've been warning you, stay away from real estate. I think they're fully priced. I would rather go on a quasi play. So I've been saying banks, and I've been saying, I think small banks which trade less than 1 time price to book, particularly in the space of, part PSU, part private, like a Dhanlakshmi Bank, which we've identified as a disclosure that is in our personal portfolio in our client. That could be these could be stocks which can double. They have no large ownership. They are less than 1.5, 2 times in ownership by any percentage, and they have huge outflow as far as the business is going. Whether it's gold loan, agri loan, it's one of the best banks from Kerala. And the similar case was with RBL when there was no promoter more than 2%, closer to 100 rupees, and you had the Mahindra's buys. So I am very optimistic on that. I was very impressed with Colgate earnings. Indus Tower is my dark horse, which I've been telling you. That will be a big outperformer. Look for targets closer to 300 on Indus Tower.
Well, good morning, Awan. Well, the main culprit has definitely been HDFC Bank. I mean, I've been in the market 35 years. I have never seen HDFC Bank go down the way it has. I mean, 27,000 crore of delivery has been exchanged. Now, that tells you when a bank index is so skewed by one stock, this is the fallout of that. The Bank Nifty has corrected more than 3,500 points, all because of that. I think the clear outcome of the bank results is that cost of deposit has gone up, and deposits are where everyone is vying for. In that case, some of the smaller cap banks look very good. But still, I would say there is enough room on the large caps to outperform now. And we think the mid caps is where there could be little more of bloodletting. However, like I said, if we are in a global bull market, and there will be this proverbial problem because of one large bank, and a lot of the PMSs and XYZ have all been overweight on HDFC. So I think this is a cleansing out process. I would expect markets to be hunky-dory by the end of this week, which means tomorrow is expiry, Friday is a holiday, Monday I would expect, because I think results, particularly on the mid-cap side, have been rather stellar, whether you see an REC or you see an Indus Tower or you see an IndusInd Bank. So the overhang of FI ownership in HDFC has been the main culprit, and the volatility has aided them because of the Bank Nifty underperformance. I think there's a reversal on the cards maybe in the next 2 days.
Hi, morning. It's not just HDFC Bank which has got a chill like Delhi, but even other large caps, right? Reliance Industries, for instance, or an L&T has not been doing a whole lot last 1 week. And more importantly, the rub-off of HDFC Bank on IndusInd Bank, which fell 6.25% yesterday. SBI has been a drag. And Axis Bank, even though the numbers were decent, the ADR again was falling last night.
So Aisha, like you said, the weightage of HDFC Bank will prompt a lot of rebalancing in the large caps. We still think IndusInd, Axis. What about ICICI? I think the numbers were far more steadier than ever. And IndusInd, for all what the hunky-dory noise is, there was correction. But on the four-wheeler side, being one of the part owners of Ashok Leyland, they are seeing the best traction ever as far as vehicles go. IndusInd is the largest lender in four-wheelers. And I think that it is just a matter of time that their NIM start to expand more. We have a buy rating over here on IndusInd. It is in our portfolio. But like you said, it is the Bank Nifty which is actually led from the front. And to balance that, you have Reliance and L&T has more or less been on a market outperformer rating. But on the other hand, look at Persistent, look at Coforge, look at the Midcap IT, look at the Midcap Pharma. So there are enough room, there are enough legs for the market to move up. Bank Nifty is grossly oversold. Not grossly, very, very grossly. And I think now, just maybe in the next 48 hours, you will see more of reasoning out of HDFC Bank. You cannot have a balance sheet at 13.5, 14 times 1 year forward when some of the large cap, mid cap banks are trading at 18 times. I think this is the time for long-term investors who want to buy a good stock. And today you are just reading, they've crossed the 2 crore mark on the credit card business. So I'm not trying to portray a perfect picture, but in all this weakness, you will get only prices when there is weakness because of the over ownership that you will get an opportunity of an entry point into HDFC Bank.
Okay. Okay, IDFC Bank. And they said the following. What did they say? NPAs वापस आ रहे हैं. Nobody wants to hear that. That spooked the stock, Bhasin sir.
Yes, Nikunj, I would take it with a pinch of salt that they are one of the largest MSME players, where Vaidyanathan has been trying to gain his market share, and that is in two-wheeler, in MSME loans. And rightfully, there will be a little bit of pressure there. But they are one of the fastest growing CASA ratio depositors, and their deposits have been stellar. I think their NIMs above 5% is a clear example of how he has modified a lending institution into a full-fledged bank. At 80 rupees, it has a very fine risk reward. Like you said, there will be a skew towards a little bit of rising NPAs in an economy where we know that sooner rather than later, the budget and other things will be the trendsetter. But given the government's outlook, given that most industries are doing well, a little bit of tinkering on retail and MSME will be part of the course. I still think IDFC Bank is one of the finest led banks, and the CASA ratio deposit growth is one of the stellar players over there. At 80 rupees, I think there is a fine risk reward of entry into it.
Sanjiv, before we let you go, let's have a list. Are you recommending buying anything if the market were to decline further today?
Well, wholeheartedly. I mean, ignore the numbers. Look what Kunal just pointed out. Petronet has been one of our topics also from 205.10. And I think as a follow-through of that, GAIL numbers on the 29th will be the most stellar you have ever seen. It will be the best in the history of GAIL. So as a corollary to that, if LNG prices are reasonably well played because they have contracts with RAS on the long term, then GAIL becomes my top pick there. IndusInd Bank is something I spoke of. Indus Tower came out with 2x after provisioning everything for Vodafone. And Bharti's ventures into 5G is going to I mean, the management commentary is extremely bullish. I think this stock is headed to new highs. And my favorite, SW Solar. Now, you've read today, REC is going to commission almost 1.5 lakh crore on the solar panels. The only player in the world which does MEP, mechanical engineering plumbing, is Sterling and Wilson. This stock is headed to 750. So use the decline to buy. So GAIL, IndusInd on the large caps. You can add an HDFC if you are looking to do a SIP. You cannot get it cheaper.
I would like to draw everyone's attention, Kunal, Nuresh, Bhasin Saab, railways. Chuk Chuk Gadi, that's what you call them in Hindi. Everyone thought that Chuk Chuk Gadi stocks will move at bullet train. Then they started become aviation speed. What's going on? You remember the word Bhasin साहब बचपन में बोलते थे चुक चुक गाड़ी रेल गाड़ी
अरे बिल्कुल निकुंज जी आपने तो yesterday you hit the nail on the hammer on the nail. आपने IRCTC को पकड़ा था वो 7% घट गया कल और मैं आपकी कमेंट्री सुन रहा था. I am still bullish on this space, but like you said, there is froth across the board on some of these sectors. Particularly railway, defense, and the mid caps. Be watchful over there. There is too much expectation and built in. If IRADA numbers were good, but it trades at 4 times price to book. I mean, now even HDFC is less than 2.5 times or less than 2.5, 3 times. And Axis and ICICI are a scream over here. So I would definitely say get into large cap, mid cap, large cap banks. That is a sweet spot. In railways, we still think IRCTC, even though it has a stream of businesses which are reasonably well priced, the stock is not cheap. We still think that has more legs on the upside, given that Vande Bharat, booking, catering, and the near part is doing extremely well. But I would say mid caps is where the pain can persist, at least till this expiry a little bit more.
Yeah, good morning. So, Avan, I thought Birlasoft numbers were very, very smart in the mid cap. And that has been the trend. I think mid-cap IT has been far better than large cap. But that is understandable. Now, we know that Tech Mahindra had priced in the worst and they had some issues with their BFSI space, but the transition has been rather well. And I think that can be a relative outperformer. On the other hand, Tata Steel really was the star. Even though volumes fell, I have never seen double-digit strong earnings EBITDA, which has been very, very positive for a company like Tata Steel. So I think metals, given the proxy of China's RR cut, can be a very, very good play. And Tata Steel has definitely, beaten expectations. Now, the big underlying remains how fast can they divulge their chorus assets, which are actually quoting at 3 times the price. And once the leverage comes down, return on equity will improve. They have anyway brought down their debt. So I would say Birlasoft, Tata Steel and Tech Mahindra, all three are relatively good. In the banks, I think there is too much of pessimism. I thought Axis Bank numbers were rather better than expected given the large base of the wealth acquisition of Citi. And we know that the deposit franchise has been in a little bit of a problem because of liquidity. But I think that's part and parcel. If you are going to look at credit growth, then I think both Axis and HDFC stand to be bought at these prices.
Sanjiv, morning. Sanjiv, how did you check out the two-wheeler company's results? Amazing price action, and especially Bajaj and versus TVS. Your thoughts?
So Ajay, good morning. I think they are all priced to perfection. There is at new highs. For me to ask them to be bought is difficult. Bajaj is in our portfolio since a long time. And the biggest thing for Bajaj is their reinvention. They keep reinventing themselves. It's now the two-wheeler, their two-wheeler on the CV side, their three-wheeler on the CV side, on the EV side, all they are gathering momentum. Plus their export market has done extremely well with a weaker rupee. And Bajaj continues to be the top pick along with Hero. On the other hand, Ajay, I think they are mostly priced to perfection. The only stock I could suggest is another one as a disclosure in my portfolio from 1600, Balkrishna Industry. I think they were really standout numbers. Balkrishna is an MNC. You cannot have tire companies not do well when China imports have stopped, and it's the largest retraded it's the largest player in the retraded market. So I would still put my money on Balkrishna Industry for a target of 3200.
Sanjiv, Balkrishna gave out good numbers, no doubt about it, but they've also pulled back from sharing any guidance and all of that. So that is spooking certain section of the market, saying that probably it means that there could be softness in the exports and people are looking out for the 11 o'clock con call, which we'll also track. But do you think it's any matter of concern?
Well, there will be, you are at a high plateau. There will be some companies which will try to guide. And it's understandable. It actually speaks well of managements which are trying to give you any future misgivings that you will continue to grow at that rate. And we know that that is part and parcel. But overnight things change. This big RRR cut by China actually puts more liquidity in the system. It makes China's consumption, which has been a laggard, start to come back. And now a large part of the India's supply chain does still exist with China. So I think yesterday's development should be an added spoke. We'll wait for the conference call.
Okay.
Okay, fair enough. That's the view coming in. In the meantime, just curious to get in your take then on all that's transpiring between Zee and Sony now. Quite an ugly legal battle going to be playing out between the two entities. Yes, yesterday we did see some amount of reprieve in the stock price, but at 166, Sanjiv, what's the take?
Awan, it's like I said, Saas Bahu ka serial which is going on. Unfortunately, we are at the receiving end. We have a big position in Zee. We are very confident of the business. 16,000 crore market cap for a media company like Zee is unmatchable. Get rid of the Goenkas with 3% stake. They are holding 62% of institution and mutual funds at ransom. I mean, where have you heard of this? So I think all the noise and humdrum will see some big player come back. I am keeping my fingers crossed. But you will every day have to see the volatility, which is immense because of the underlying, sentiment change which happens. I don't think they can walk away with this so easily. There will be some tinkering and talk, but the faster they can get rid of the Goenka, I think that will actually trigger a huge amount of upside in this over a period of time. Suitably, arguably, this could be one of the best MNC media stocks once whole this clutter settles. So we will wait as silent sufferers and wait for the institutions actually to take a step. This should be a guiding force. 33% stake, you're being held to ransom.
They are doing that. We gather from our sources that a bunch of domestic investors have come together and have written to SEBI, and they will be calling for a special EGM very shortly to take the matter of leadership of the company and the kind of value destruction which is happening forward. But I wanted a view, Sanjiv, on HDFC Bank. Yesterday we put out a story. We spoke with our sources very close to the management, and they're saying that in the near term, so one is that you can't write off HDFC Bank. I mean, they understand that the growth appears slow in this gone by quarter, but it is not a structural slowdown. But they also go on to say that 6 lakh new retail investors have added this stock in the last 14-15 days is what our sources tell us. They're saying they'll prioritize margin in the near term and profitability versus growth. And once this high cost borrowing issue peters out in the next 2 to 3 quarters, growth will rebound. You think it should be added closer to 1400 odd?
Yeah, Ajay, as a disclosure, we have been doing a SIP in the last week, and we think that you cannot get a pedigree bank, the 5th largest in the world, which is undergoing a process. You must remember HDFC was a mortgage institution, not a quasi bank. And now the cost of deposit of replacing that high cost of deposit will take some quarters. And in the meantime, the margin has been under pressure because of this merger. But look at the behemoth. On one hand, you are saying DLF's earnings, the real estate going through the roof, and the largest mortgage lender only underperforming. How can it be? Secondly, they have always sacrificed slight bit of growth, but not let go of their margin. 3, yesterday 2 crore credit cards, they've crossed that number. 4, and out of incremental deposits, 19% in the system comes in with them. But now the base is large. The problem is this is a very heavily owned FI stock, and the norms for SEBI for disclosure of promoter entities and so on meant some compulsorily unloading. I think the fear factor has played out perfectly. If there is a perfect storm, it is now, which is in the private banks, HDFC, ICICI, Axis. Read my lips. If you do a SIP here for the next 3 months, you'll be laughing your way to the bank by the end of the year.
Of Raymond as a stock. This morning, the reports again circulating saying that the talks between the two parties has collapsed yet again. What should investors do right now for Raymond? Because even the real estate cycle is getting a bit shaky now.
Good morning, Anisha. So what's happening on Zee, the soap opera, is actually playing out in the perfect sense live over there in Raymond. So keep your fingers crossed, pray to God that some sense comes and you see a settlement. But these are tough to call. The emotions and legal battles are very, very difficult to predict. So watching the soap opera on both Zee and Raymond.
There is a difference, there's a fundamental difference there, Mr. Bhasin. I differ with you a little bit. What is happening is Zee is directly impacting the financials of that company. But at Raymond, whatever is happening is actually inside as a personal matter. The financials or the fundamentals of the company are completely, kind of insulated in many ways. Yes, there may be a little bit of pressure on the stock. It went to 1500 odd, came back at 1800. But we just had the management 2-3 days back, the volume on the real estate front and even the regular business. It will be interesting to watch 1st of February when the results actually come out, whether, there's a section of the people believe that it may not impact the financial or fundamentals. But yes, sentiment-wise, it does have a bit of a bearing. So that is something to watch out for.
Ajay, you are right. I think maybe you misread what I meant. I was just trying to be little, make it little humorous, but I'm not meaning it's a personal matter. If you recall, even Jeff Bezos went through a rough divorce when it went. It's not that the Amazon stock plunged. For them, it's a minuscule what they pay as a settlement. The underlying asset, the underlying business of Raymond's and the land bank they have in Thane remains robust. So I continue to think the business is robust. All that happens is that now when you become such a big entity or a corporate head honcho, your personal matters do make a difference, which is what is happening over here. And sentiment at a time when you are at new highs and there is worry across the board that what sort of impact this can have does play a sentimental change. But like I said, if Jeff Bezos could get away and Amazon stock only gone up, Same will be the case with Raymond, where fundamentals of the
prevail
company
eventually.
will play a larger picture.
No, fair point. No, Mr. Bhasin, we are just having a discussion, a healthy one. Yes, in fact, on a lighter note, since you brought it up, the stock of Amazon actually, surged 50% from that incident. So that is something which happened out there.
If you like this video, then like, share and subscribe to ET Now.